it's important for people who want dollars, who don't have access to dollars, they can buy stablecoin instead, and internationally. So that's been a really big deal. And they're seeing this. And U.S. The U.S. government and D.C. And the Treasury are realizing that this is a very big deal, and this is going to provide liquidity. We have got to get legislation around this, and we've got to embrace it. And I think that's what's happening. And that really is actually naturally the first step. So do I think that Bitcoin is going to disrupt the treasuries or disrupt the dollar? No, not today. And I think it just could enhance it. And that's the whole point, is that if you do put Bitcoin on your balance sheet, it could enhance the backing of the treasuries over a long period of time, not in 2 years, but I'm talking about 5, 7, 10, 12 years. That'd be a great asset to have on the balance sheet.
The story of Bitcoin's rise and fall has been nothing short of mind-blowing. After Donald Trump's victory in the November U.S. presidential election, the world saw a stampede of new investors pouring money into Bitcoin at astronomical prices, driven by the feverish crypto mania. Bitcoin soared to unprecedented heights, peaking at over $100,000 as the world believed it had entered a new era of financial freedom. But as we all know, what goes up must come down. Just weeks after hitting that all-time high, Bitcoin plunged into a bear market, trading at a striking $80,000, nearly a quarter off its January peak. The crypto market was rattled by a massive sell-off in global stocks, throwing even the most seasoned investors into a frenzy. It seemed like Bitcoin had lost its magic. But here's the twist that will leave you astounded. This shakeout, this temporary crash, is precisely what Bitcoin needed to clear the market of excess speculation and prepare for the most monumental bull run the world has ever seen. James Lavish, a financial expert with a visionary outlook on cryptocurrency, insists that Bitcoin's shakeout is not the end of the road, it's just the beginning of something far greater. The shakeout we've witnessed was just the market clearing the clutter, and now we're on the brink of a bull run that will rock the financial world to its core. So, if you thought Bitcoin's run was over, think again. According to Lavish, this is just the calm before the storm, and the next surge is going to be epic. Let's watch clips from James Lavish's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
And I'm seeing institutions come into the space and start buying. And it's interesting because you hear of the big players, and some of the big banks who are buying MicroStrategy, and some of the big banks who are buying some IBIT and whatever, and some sovereigns. But just talking about institutions and ones that you would never even heard of, like for instance, I was talking about this the other day, that when you look at the ETFs and the holdings of ETFs, sometimes you have massive players in there that people would not even recognize, and so that's important. How are they investing around it? I don't know. The options are likely a very big deal to them because they can manage risk around it. And now you've got that ability to do that. So the point is that now we're starting to see players come into the space that may not have come in before because of those operational issues. Now, even hedge funds, but forget about pension funds and endowments. They couldn't come in before the ETFs. Now they can. Mm-hmm. So, but as Bitcoin does solidify itself as an asset in that total investable universe, and that volatility does dampen a little bit. I believe it's going to continue to be volatile for weeks and weeks, or months and months, and maybe some years here, likely years here. But once it does that, then it starts to draw from the rest of that investable universe, not just from stocks and risk assets, but now it's going to draw from bonds and from real estate, because it's an easier asset to get a hold of for real estate than, you don't have to have management and oversight and maintenance fees and all those costs involved. Super simple. It's just a store of value rather than have an illiquid store of value of real estate. You have a very liquid store of value in Bitcoin. I believe that would be one of the buckets it starts to draw from. And then obviously bonds, with everything we're seeing that's going on the sovereign level, and how all of that debt and all that risk in the great financial crisis was kicked up to the sovereign level. Mm-hmm. Now we have a problem there, and We have necessary debasement of our currencies, of our fiat currencies that you talk about all the time, that bond investors are waking up to. And they're realizing they need a better return on their longer dated bonds in order to get a real return against actual inflation, not the CPI inflation, but real inflation.
Right.
And so that's a kind of a big picture overview of where we're at and where Bitcoin kind of fits in, but it will eventually start to draw from those other asset classes, I believe. We don't know exactly what's going on with the custodians of Bitcoin. We don't know if they're fractionalizing it at all. We don't truly know until Coinbase releases exactly what all the addresses are and exactly how they're holding them and verifies that. Like we have audits. Yeah, I don't know. Do I expect it? No. Do I believe that there's manipulation going on? No, I don't believe that. I just think I just think that truly, I think, look, $100,000 has been a massive mental level for people. You know, it jumped over it, came back, jumped over it, came back, jumped over. It's done it like 4 or 5 times. And I believe that there are some the OGs, people have been holding on to this thing for a very, very, very long time, and they've made life-changing wealth, and they're going to enjoy it now, and they're cashing in a little bit. And you know, that's okay. They have way more than you and I do, and they're just cashing in, and that's okay, you know. But I don't believe it's being suppressed. That's not my belief. Is it possible? Sure, of course it is. You know, but I do believe that institutions are now in here and taking advantage of this volatility. And once it does get over 100,000, stays over 100,000, and that mental level is gone, well, that becomes a support level. But we're not there yet, at least not today. So I come from that world, and it's very difficult to change your mindset away from something that has worked so well for you for so long. And so part of the issue is just the messaging around Bitcoin. We have a lot of people who talk about Bitcoin saving the world, and how Bitcoin fixes this is the saying, right? And it does fix a lot of things. But when you talk about that, all the traditional institutional investors here this is disruptive. Is it really disruptive? Can I believe that's really disruptive? Is it going to really disrupt the payment systems? Is it going to really disrupt gold as the ultimate store of value? And that's where you get into that question that you and I had chatted about very briefly a couple of days ago, which is, well, Bitcoin doesn't have any cash flows. How do you value it? There's nothing there. And that's why Buffett called it rat poison squared, because it doesn't have any inherent value. There's nothing you can hang it on. And gold had suffered this for a long time, you know, that there's no dividends. There's no cash flow from it. You're not creating anything from it. You're just storing things into it and hoping that somebody will buy it from you at a better price later. And that's all you're hoping for. But if you think about it, but gold is gold's a base metal. So, you know, it can't be destroyed basically. So, you know, it's going to be there. The question is, how much money is going to be chasing after that? And that's what gold investors that's what they anchor themselves to, is the expansion of the money supply means that there's going to be more dollars chasing after that. So of course it's going to be, you know? Mm-hmm. And so, but what's the great utility? I mean, there's definitely some utility for gold, but you know, the big utility for it is jewelry. I mean, you have some on you, you know? So, that's the base utility for it.
In just 3 months, over 20 million new Bitcoin addresses have been created, according to crypto data and analytics firm Glassnode. That's a staggering amount of new entrants into the crypto space, and it's clear that something big is brewing. Despite Bitcoin reaching an all-time high of $109,071 in January, it has recently taken a significant dip. But here's the shocking part. This dip is just a part of the process. What we're witnessing is a market shakeout, clearing out the excesses and setting the stage for the next massive bull run. Bitcoin is evolving. It's no longer just for the adventurous or the speculative. Institutional investors are diving in, and Bitcoin-backed ETFs are opening the floodgates for more conservative funds like pensions and endowments. These institutional players are recognizing Bitcoin's value not just in the short term, but as a critical component of future global investment strategies. Its liquidity, low maintenance costs, and potential to outperform traditional assets like bonds and real estate make it a game changer. And the real twist? Bitcoin could become a cornerstone in national balance sheets, potentially strengthening the financial stability of entire economies. The shakeout we're seeing is merely the preparation for Bitcoin to reshape global finance in ways we've never imagined. Let's watch more clips from the interview.
And people can't get their heads around, well, what's the utility of Bitcoin?
Mm-hmm.
And so when we see things like what's going on in the Doge Commission and how dollars just seem to disappear out of the government and into the hands of wherever,
It's crazy.
and there's untraceable. Well, we think, well, if they had it in Bitcoin, you'd see where every single transaction was. You could see it all, and it would be verifiable easily. And you don't have to verify who the other counterparty is. And so now we're seeing that with gold today, with the run on the London exchange, and how the Bank of England is struggling to get the gold that people have deposited in their vault. Well, they fractionalize it out, they've lent it out, and now they're struggling to go get it. Well, you don't have to worry about that counterparty with Bitcoin.
Right.
This is a really difficult concept for institutions to get around. I mean, we store we have a custodian that holds all of our assets. We don't have to worry about it. They hold all of our certificates, all of our stocks and bonds. It's all digital, but they manage all of that. The banks hold our cash, as hedge funds, they manage all of that. And so it's hard to get your head around wait a minute, I'm going to like self-sovereignty of my own money.
Mm-hmm.
How does that work?
Yeah.
Then can I trust it's really there, even if I have these keys or these
Right.
words? And so it is a big hurdle to get over and get past as an institutional investor because of just those things. It's difficult to conceptualize that there's something here that is truly trustless,
Mm-hmm.
that is truly decentralized, that I don't have to worry about that it's going to be stolen or it's going to be lost, or that it's there as long as I've got my my keys to that portion of the time chain, then I know it's there. So it's immutable. But we are seeing some of the smartest players in the space get over that. To answer your question though, by and large, they're still not there. It's taking time. It's taking a long time to get around get that conversation up to the top of the list to become an allocation. At this point, it's still only been a risk asset. It's something to go out on the risk curve. It's something that's different that could enhance your portfolio. They have seen some of these things, but they believe that it's because it's a risk asset and they're taking risk by adding it to the portfolio rather than understanding that they're actually adjusting their overall risk adjusted return down over a long period of time. And it takes a minute to get there, and they're not there yet. I was up there last year with and trying to help educate some of the senator and congressman staff about there's a lot of just ignorance. There's a lot of disinformation. There's a lot of confusion.
Mm-hmm.
They don't know the difference between Bitcoin and all the other things. Oh yeah, we know about Bitcoin. We've been looking at the Ethereum one. It's like they just don't get it. And it's not that they're dumb. There's a lot of misinformation out there. And then you've got but the point is, I think that a lot fewer people in DC understand it. And I think the vast majority of them are not worried about it at all. And I don't think they care about it. They just think it's some speculative asset for, a small portion of the constituent that is very vocal about it, but it's not that big of a deal. It's this little $2 trillion asset. It's smaller than Apple, So, but by and large, I think that they will come around to it eventually, and they're having the conversation. And that's probably the most important part.
Mm-hmm.
So if you want to talk about, this administration, how positive it is, it's that we're now having the conversations.
Sure.
Do I think that we're going to have a Bitcoin strategic reserve this year? No, I think it has to run through a gauntlet of legislation and committees, and it's just going to take forever.
Yeah.
So nothing happens quickly in DC, or at least not in Congress. Maybe it does in the executive office now, but not in Congress. So yeah, I think that it's going to take time. I don't think we're just going to rush out there and start buying it. Could we have some sort of NGO that's doing it? Well, we've seen that that's possible. We could.
Yeah.
I just don't think this administration is going to do that, especially after cracking down on all of them. They're not going to go and put a black mark on their record by doing that. That just doesn't make any sense to me. So it used to be back in the day, before I was even involved in this space, how I understand it, it used to be that people bought Bitcoin, and then Bitcoin was kind of like the stable coin, that they would go from there to buy the other coins, and they would move out of Bitcoin into other things. But then came along the stable coins, and now they're buying stable coins, and that's kind of their holding place in order to get other currencies, cryptocurrencies, or Bitcoin. It's important for people who want dollars, who don't have access to dollars, they can buy stablecoin instead, and internationally. So that's been a really big deal. And they're seeing this. The U.S. government and DC and the Treasury are realizing that this is a very big deal, and this is going to provide liquidity. We have got to get legislation around this, and we've got to embrace it. And I think that's what's happening. And that really is actually naturally the first step. So do I think that Bitcoin is going to disrupt the treasuries or disrupt the dollar? No, not today. And I think it just could enhance it. And that's the whole point, is that if you do put Bitcoin on your balance sheet, it could enhance the backing of the treasuries over a long period of time, not in 2 years, but I'm talking about 5, 7, 10, 12 years. That'd be a great asset to have on the balance sheet.
James Lavish, a seasoned financial analyst, sees Bitcoin's recent downturn as part of a broader shakeout, rather than an end to its historic bull cycle, aligning with the sentiments expressed by analysts in a recent Cointelegraph report. Lavish argues that these corrections are crucial for clearing out market excesses and setting the stage for future gains. He believes that Bitcoin and other cryptocurrencies are gradually becoming integrated into traditional financial systems, enhancing their utility and acceptance among institutional investors. This perspective is particularly relevant given the current market analysis, which suggests that Bitcoin's dip is a temporary adjustment before the next upward trajectory. The report indicates that despite a 22% drop from its all-time high, Bitcoin's foundational market cycle remains intact. This view is supported by the introduction of U.S. spot Bitcoin exchange-traded funds, ETFs, and growing institutional investments, signaling a shift in how traditional cycles are understood in the cryptocurrency space. Lavish emphasizes the importance of legislative support for cryptocurrencies, predicting that as governments and financial institutions continue to understand and integrate these assets, Bitcoin will not only recover, but also potentially enhance the backing of traditional financial instruments like treasuries. His long-term outlook sees Bitcoin as a significant asset on balance sheets, suggesting a gradual but inevitable integration of cryptocurrencies into broader financial strategies, thereby reinforcing their position as a new cornerstone in global finance. As we wrap up, how do you perceive the impact of the recent market shakeout and the influx of institutional investments and Bitcoin-backed ETFs on Bitcoin's path to becoming a critical player in global investment strategies? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.